Hello everyone, how's it going? In this video, we're going to look into this company called Teladoc Health. We'll go over both the positives, which is the bull case scenario, as well as the negatives, which is the bear case scenario. This stock has seen a huge run up ever since it started. Back in 2015, it came public, and since then, it has been growing crazy. So let's try to understand what's the company about and what are some of the negative aspects as well. Number one, the huge tailwind that they have going on for themselves is they have good balance sheet and they're continuously buying and acquiring new companies. So this is back from 2015 in their first annual report. They explain about how they've been buying Stat Health Services, which was Teladoc, BetterHelp, EmeryDoc. Then in the later annual report for 2020, they spoke about Livongo, InTouch, Advanced Medical. In total, they have about 12 or more acquisitions which Teladoc has been purchasing over the past few years. This brings the company a huge, deep moat that they are continuously widening for themselves. And with this, it will create a barrier to entry, especially with regards to the amount of acquisitions they're doing and the type of services that they're providing. And each of these companies, before acquiring, have purchased and done their own acquisitions prior to joining Teladoc. So they are coming full circle with regards to the services that they're trying to provide in the healthcare services. And that will create over time a compounding effect, especially with regards to amount of members that they're collecting and physicians also joining in. And that compounding effect will attract more physicians and more members eventually, and that will keep on compounding for them. So that's a huge tailwind that's going on for themselves. And only time will realize what this will come up to be in the next 5-10 years. Now, the next is their majority, they sell their services to clients, which are employers. So, and that is where the workers' compensation comes into big play, especially if someone is this is something which is very prominent in the gig economy, where if someone gets hurt at off office hours, so anytime after 5 o'clock when the outpatient services are closed, it's difficult for workers to find good outpatient facilities which are open after 5 o'clock, and that's where they end up going to emergency off. And in emergency, the rates are anywhere from 4 to 5 times the amount of billing that you'll get from outpatient services. And that's where a service like Teladoc comes in, where you can find a physician 24/7 and get their help right on spot without going to an emergency facility. That's where employers are starting to adopt this. And this is a good market, especially in the workers' compensation. Now, this is something which I've been talking about in most of my previous videos or analysis. This is about 100 back, and this was a report that came out from Tony Analysis. And just to quickly understand, in this chapter, in this report, he went over a couple of companies that has given 100 baggers over the past few years. And he found few underlying patterns in all these companies. And this is the most interesting pattern of all. He's assuming two companies. Let's say there's a company called Flat and there's a company called ACC. And he's explaining what among the two companies which will have more growth as a shareholder. Now, let's assume that the earnings per share is 2000 in the year 2000 was $4. So $1 for each quarter. And in the end, you had $4 earnings per share for both the companies. Then the subsequent year, which is 2001, let's say the earnings for Flat was 1.25 for quarter one, 1.25 for quarter two, same for quarter three, and same for quarter four. So in total, if you add all the 1.25s, you'll get about $5 per share, earnings per share for 2001. But in ACC, they went a little bit different. They had incremental growth over the quarters. So in 2001, quarter one had about 1.10, 1.20 for quarter two, 1.30 for quarter three, and then 1.40. So they have been seeing 10% growth every quarter. And at the end, if you add, you'd still get the $5 per earnings per share for both of these companies. But since ACC was growing incrementally over the quarters, it will enjoy a better share price over the next year. And that is something which you can see with Teladoc's growing revenue. They're not profitable, but the revenue is growing. And if you can notice the quarterly, you can see the revenues are growing. Annually, the revenues are growing. Last year, yes, they had a very huge run just because of the COVID. And COVID basically catalyzed or pushed that growth further. They were growing before that as well, but with COVID, they expanded even more. Now, this is the most interesting aspect about the business, and which is probably being overlooked: the value of time that the business is creating. This is something which Gary Vaynerchuk explained. He had missed the Uber investments in the first few rounds, and he later realized that the biggest value that Uber was creating, it was not the ride sharing facility, but it was the value of time that they were providing. For someone to wait for a taxi to come and wait to come for you, instead of that, now you could control these taxis and these ride sharing facilities for you to go on to different places. And that is where Teladoc is coming as well, where instead of going in, setting up an appointment based on the availability of the physician, waiting, having that time taken out from your other days of activities during the day, leaving work, taking time off in order to go to a physician, that is complete waste of time and very inefficient way of doing things. Instead of that, imagine if you're going back home, on your way back home, you just wanted to have a quick consultation. On your drive back home, you can call the doctor, set up an appointment right there and then have that thing immediately taken care. Of course, these are for smaller cases. In the bigger cases, you might have to just directly go to the doctor. But still, majority of the cases where you're not going to the doctor, you just need a quick consultation, you can do that right there and then, hence creating a value for time. And time is the most valuable resource at this particular age. Well, the thing is, every generation that you come across, people in the subsequent generations, they tend to do more and they require more time. And hence, providing these services will definitely attract people in that sector. Now, let's talk about